As we discussed before the break, U.S. stocks plunged today, and tech stocks were certainly no exception. Even LinkedIn ended the trading day down nearly 10%, but went up after hours after reporting a second quarter revenue that more than doubled as it lured new members. Speaking on a webcast just minutes ago, CEO Jeff Weiner reiterated that the company's development strategy has to focus on its members.
Our most important core value is that members come first. We develop products across 3 dimensions to deliver value to our members. Professional identity, which helps professionals connect, find, and be found. Insights, which help people get the information and knowledge they need to be great at what they do. And everywhere, which ensures that our platform works wherever our members work.
And joining us now from New York to discuss LinkedIn and the trading day is analyst Ken Sena, Director of Institutional Equities at Evercore, who closely follows this stock. Ken, first of all, some pretty good numbers from LinkedIn today. What stands out to you?
I mean, they were. I think that you had kind of a broad-based beat on revenues. Margins came in above expectation. Also, the non-hiring solutions revenues. So this would be revenues that they derive from advertising and from consumers paying fees to connect to other consumers. Those came in, much ahead of our expectation. And so I think that shows some ability to drive some increased engagement. So I think it was good results.
Now, LinkedIn did take a big slide today during the sell-off. It did regain some of that in after hours. How do you think LinkedIn is going to be affected by all of this other kind of market madness going on?
Well, I think LinkedIn right now, definitely it's a high beta tech name. It has a few other factors I think, it's working against. It has there's a high demand right now for social media stocks like LinkedIn. But even in this market, I think it's hard to, hide. There's no cover really. But I would say that right now, LinkedIn, at least over the last week or so, as the market has shown signs of rolling over, LinkedIn has held up pretty well and has even recovered much of its loss, I think, from today's sell-off.
Now, only 3 more months until the lockup ends. Are you expecting any kind of a mass sell-off from insiders when that ends? And is that any concern for you?
I think you do have to assume that there will be sell-off. I think in order for the sell-off really to affect the price, though, you have to assume that investors are willing to pay more for LinkedIn, given that it's a social media company, as opposed to for their belief in its earnings potential. If you really believe that the value of the share right now reflects fundamentals, then the increased sell-off per share shouldn't make a difference. But I think that, to the extent that LinkedIn gets a premium because of the fact that it's a social media company right now, then certainly the expiration of the lockup periods at the end of this year will have a pricing impact.
Could you see LinkedIn doing a big secondary offering?
I think it's hard for me to comment on that. I think that sure it's possible. I feel like sure.
What kind of risks or threats are you seeing from Google+, which just launched in the last month? Any indication there that could eat into LinkedIn's market share?
Well, I think, I tend to look at LinkedIn's opportunities in sort of 2 categories. It has the opportunity with recruiters where it's certainly demonstrated, a strong ability to compete. And I think, if you look at sort of the LinkedIn's overall valuation, it reflects something like 75% of the market cap of the entire sort of jobs boards industry right now, but it does about 6% of the job listings. I think the other side of LinkedIn is really their ability to drive engagement with the consumers that are on the site and, advertise to them as well as get them to pay additional fees for the service. And I think that's where Google Plus potentially could be a competitive risk, but I think it's still very early, giving Google Plus's traction to show what they're doing or what sort of like replace services that they can offer to LinkedIn users.
So how about Facebook's platform, where companies can really branch out, really take advantage of that massive network? Is that becoming more of a risk for LinkedIn?
Well, I think right now LinkedIn sits in a a unique position. I think it does. Its strength is clearly with recruiting, and I think Facebook and Google, while they offer the ability for users to profile their career and education information, and they definitely make it easier for people to connect and reacquaint and drive some of the sort of professional insights. I think LinkedIn does have a unique position. I think there is still the challenge, though, when you step back and you see a company where the stock, the value valuation of the company is now in excess of $9 billion, but you're still talking about a company that generates a few $100 million in revenue and is expected to barely, be profitable this year. So I think.
So what kind of, then Ken, what kind of revenue growth are you expecting for LinkedIn in the future and member growth as well?
Well, we're probably 40. We're assuming that top line, can grow over the next 6 years or so. Can grow, 40% or more. Margins can actually sort of go to the high end of the company's guided target range, with EBITDA going from I think we're upwards of over 50%. And even CapEx as a percentage of net revenues will kind of, half in that time. But we still get to a point where we're more about $70 in terms of the target price. So we still struggle a little bit to get to where the stock is currently trading.
How about in terms of adding members and also paying users? How do you expect that to grow going forward?
We assume very strong growth right now, and I think that their ability to sign up registered users and members, I think it will remain strong, given that they are able to offer a proposition that really some of their competitors can't, and that's really its insights around talent. It's also the ability to apply for jobs easily. I think their LinkedIn Now product, in terms of making it very easy for users to sign up, to apply for jobs on company websites just by logging in with LinkedIn, is a great feature. And I think that all of these features should ultimately drive engagement for them. But I still think you do have a valuation gap that remains.
All right, Ken Sena of Evercore Partners on LinkedIn's first ever earnings report as a public company. Thanks.